evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading Satellite Office down in sunny South Florida. Today's date is Wednesday, December the 26th, 2012, and here is today's After the Bell market summary brought to you by WallStreetTrading.com. I want to first start off by taking a look to see how the how the indices close here. The Dow Jones closed down 24.5 points. The Nasdaq closed down close to 24 points, and the S&P 500 closed down 6.83. Taking a look at the breadth today, we had 4,000 issues declining, and we had 2,176 issues advancing. So just about a 2-to-1 in favor of the bears to the downside for the breadth today. All right, taking a look at the SPY here. SPY was down 60 cents, down close to 0.5%, closing down 0.42%. Let's go ahead and take a look at some levels that we have to keep an eye on going into the later part of this week here. Today's lows is definitely going to be an inflection low to watch here. Today's low on the SPY was 141.35. We break below 141.35. We're going to be looking for a move down towards 140. 38. We did have some selling pressure in the markets today. If you guys take a look at our midday market update video, which we put out around 1:30 or so, you will see the type of analysis that we were looking for why the market had some selling pressure to the downside today. And I also review a bull trap on Facebook on the intraday time frame. So that's definitely something you would want to check out if you're interested in recognizing bull trap patterns and just recognizing some general market patterns as well, and see some of the ones that we spotted out today in today's market. So in any case, so we're going to be looking for the SPY to make a move down towards 140.35 if we break today's lows of 141.35 on the 141.35 on the SPY here. If we take out today's highs on the SPY of 142.71, we're going to be looking for a move back over 143, possibly back up towards 144. I think this week you get some more of this little sideways consolidation around these levels. I'm not sure if we break down this week. The volume still pretty much to the light side, as there's still a lot of people off on vacation for the holidays. We do have the New Year's coming up here, so therefore I'm not expecting much volume in the market to maybe the second week after to maybe the second week in January. So therefore, just keep tabs on the market, see what levels there is to watch. If you don't see a trade, don't force a trade. Definitely just expecting some type of consolidation down here. As you can see, we're inside of that little key trend line from that channel that we've been highlighting and we've been watching for the past couple months here. So you can see we had a little fake breakout above that level there, but we closed right back inside that little channel. So therefore, if we continue to remain below this 143, going to be expecting some type of consolidation here. Gearing up for a move lower if we do not get back above 143. Let's take a look at the triple Qs. All right, the triple Qs are hanging in there, still hanging there. This little bottom support range that we have down here around the 64 and a quarter level. You can see we're pretty much trading in the range for the past 6 weeks here between 64 and some change and this, call it 66.5, 67 level here. We're basically trading sideways on the Qs right now. So really, until we break below 64 and hold, you have to kind of expect this range-bound action to continue, as that's been the scenario for the past couple weeks here. All right, let's take a look at the IWM. As you guys recall, the IWM has been showing some relative strength. All right, taking a look at the IWM, we're kind of flagging it a little bit going into this little rising 20 EMA here. You have this little high that was made last week on last week Tuesday. Little sideways kind of bull flag channel action right here into these little rising moving averages. We'll have to see how this one sets up. If they're probably going to pull it right back down, back towards that 82 level, or in fact, are we going to get some type of a little higher low set up here off of this little base that we accelerated off of, all right, and make a nice little continuation move higher. So going into 2013, so it's going to be pretty interesting to see how we set up here. We had a nice little pop in crude oil today. If you take a look at the USO, UCO is actually double long crude oil if you were looking to play it that way. I've been talking about this crude oil getting some nice little upside action. If you guys watch the weekend review video, highlighted the fact how crude oil is basically trading in a big triangle and expecting a big move in crude oil sometime in the early part of 2013, maybe sometime before the end of the second quarter. All right, but take a look at the USO now. If we could get some more volume behind this trade, this will look to go back up towards 34, 34.50 possibly. If we take a look at the crude oil futures, right, which gives you a better accurate reading, you can see here that we're basically battling right now these 200-day moving averages that are coming up on the crude oil futures. We closed today on the crude oil futures at 91.17. The 200-day moving average right here, the last one right here, which is a simple moving average, is around 91.73. So pretty much if we could get above 92, we can make a nice fast move up towards 94 on the crude oil. That's we'll see how that dribbles down into some of these smaller stocks here. Some of these energy stocks like COP, ExxonMobil, which they picked up some steam last week and now look to be giving it back here. ExxonMobil sees having trouble holding above that key 88 level. If you take a look at CVX is hanging in there, and let's take a look at SLB Schlumberger. SLB is not looking that great at all, below all these moving averages. It looks like it could maybe roll over. In general, pretty much the same thing here, trading sideways. 67 between 67 and 72. One stock that I do like in the energy sector is Halliburton. I call her Halle Berry. We have a nice little bull flag pattern that could be setting up here. You have the nice little expansion candle, sideways action right here, kind of flagging off that little expansion candle, coming into a rising 8 EMA and 8 SMA, which we nicked that this morning on the lows. So we'll see how this one sets up. May need a little bit more consolidation, but once this thing could break above this 35 level with some conviction and some volume, this can make a nice move back up towards 36 and possibly back up towards these 38s. Keep an eye on Halliburton. I like that. Rig, this oil driller stock is not looking that good. Pretty much trading sideways, but the least path of resistance is to the downside. So if the market was to sell, this one could possibly be looking for a dip below 44. All right, the financials are pretty much trading well, hanging in there. Bank of America, BAC. BAC making new 52-week highs today here. You want to be careful at these levels right here. It is running into the 200-day simple moving average on the weekly time frame here, and the 50-day simple moving average on the monthly chart. Goldman Sachs had a nice little pop up in the morning, faded back and closed on its lows. Pretty much still consolidating though as well on top of a rising 8 EMA, 8 SMA. And then you take a look at JP Morgan. JP Morgan doing the same thing here, consolidating near these highs on a rising 8 EMA, 8 SMA. These nice little moving averages curving up here. Gold had a nice little pop today, kind of faded its gains off. Well, not kind of, it actually did fade its gains off. But there's some there were some buyers in gold today. One sector that I do like right now, looking for some possible dip buying opportunities, is the GDX gold miners. As you guys recall, I talked about how we called that breakout in the miners right here when we broke down below that little declining channel, which I shaded in yellow. All right, and now we're kind of trading like in another channel, the same type of channel we had up here, but that's right below that channel. But if the gold miners could get back above this 46 level, and we could get back inside this channel, we could have a nice little pop going into 2012. Either way, we have some key inflection levels to work off of, which if you guys follow some of our analysis, we'll keep you guys up to date with that. One stock that I did like, which I called out last week in our chat room, mywallstreettv.com, password to log in, is smart. Is the miners. Well, Newmont Mining was coming to this little triple bottom area down here. All right, 1, 2, 3. We called Newmont Mining for a long on Wednesday. We've been tracking it ever since Wednesday, and we called the miners for a watch this morning as well. And you can see here on the 5-minute chart, Newmont Mining gave you a pretty nice setup once it held that nice little 44.60 bid down there and got back above this 44.90 level. Or if you were just tracking it, you could have bought it right over here over this 44.85 level. Either way, we had the miners on watch today along with the little commodity sector. As this morning going into the open, risk was on across the commodity sectors. Crude oil popped up, gold popped up, silver popped up, copper popped up. The risk trade was on this morning, but then some of them faded off. So in any case, hope you guys are having a happy holidays. I know some of you guys are not trading right now. Some of you guys are just watching the markets or whatever. Have a happy holidays. Have a happy holiday. Spend time with your family and friends, and enjoy the rest of the week. Have a great day, guys. Cheers.